This show contains discussion of general investment strategies for information purposes only and should not be construed as investment advice. Diversification cannot eliminate the risk of investment losses.
It's time for the Money Puzzle Podcast, with good conversations and realistic solutions to the money puzzles we all face every day. Join your hosts, chartered financial consultant and financial advisor Robert Edgen and financial advisor Brian Johnson to learn the money tips and tricks you need to achieve the financial confidence you deserve and the future that you dream of. Now let's get this show started.
Hello and welcome to the Money Puzzle Podcast. I am Robert Edgen, and I'll be your guide for the ride for the next few minutes. This is the place for candid conversations about money, finance, investing, and all of the other pieces of the money puzzle that you need to figure out so you can have the financial confidence that you deserve and the
future that you dream of.
That's right. In the studio with me today is business buddy extraordinaire Brian from the Denver office. Thanks for coming down and spending the day with me today.
You're welcome. It's been a while. I think 3 weeks or something.
Well, and the last couple of times we did this, we were not together.
Well, we did one.
So
I think, did we? I can't remember. It's been a while.
We do a lot of stuff. Who the heck knows? So all I do know is that it is much better. I enjoy it more when we can be here doing it together.
Yes. And
hard to believe, but 2020 is, we're well more than halfway over now.
I know. We have 98 days to the election.
It has been a very quick year. Now, yes. I know, obviously, they used to say, or I used to say, time flies when you're having fun. Time flies no matter what.
Because no matter what.
This maybe has not been the most fun year I have ever had. I think we got shut down March 16th. So we had March to April to May to June to July. That was 4 months ago.
Yeah.
It seems like it was just yesterday.
Yeah.
We were out of the office for 5-6 weeks, but here we are. We're back.
Yes.
At least for now. So now I filmed actually last episode without you because you were at a 4-H event with your kid.
Yes.
Something that my children and I never participated in. When I told them 4-H, they thought we were having like 4 hot dogs for dinner. They had no idea what the H was. But did you buy something at the 4-H event?
Yes, I knew you were going to bring it up. So I bought a goat. We used to raise meat goats years ago, and we loved it, but the herd got really big, and the cost of hay and stuff, it just didn't make sense anymore.
Problems I don't understand.
Yes.
So you used to raise meat goats.
Yep.
Is that a specific kind of goat? Don't all goats have meat?
But there are specific breeds, like boar goats out of South Africa, that were bred specifically for meat.
So, okay. And you bought one. And actually, I think it's very sweet. You did not buy a goat for the goat's sake. Am I right?
I bought it for a little girl's sake.
So that's right.
Yes.
Little girl was having a hard time talking to folks.
And finding somebody to buy her animal. So because of COVID, you couldn't really get out and market your animal to businesses and stuff. So she came through the stands and gave me a flyer and asked me if I would buy her a goat. And so I told her I couldn't say no. I could not. So I bought an 81-pound goat for $1,000.
And which gets you how much meat from a meat goat?
If we're lucky, 20 pounds.
For $1,000. So yes. Ladies and gentlemen, this is how you spend $50 a pound on meat plus processing.
This is not a good investment option.
No, but you did make a little girl's day.
I did.
So
she was very happy.
Speaking of little girls, what did your little girl sell?
So, well, she's not so little anymore. She's 15 and she's taller. She's like 5'10". Anyways, she sold a pig. So she worked really hard on 2 pigs, one for me. Well, for all of us, really. And then one to sell at the fair. And she sold them for $7 a pound. And it was 295 pounds.
It's a big pig.
Not really, no.
Well, it sounds like a big pig to someone who's never raised a pig before.
Yeah, no, he was still kind of lean. There'll be some good bacon out of it for whoever bought him. It'll be actually excellent bacon. But like the pig that we have, we'll grow him to about 400 pounds before we slaughter him.
400 pounds?
Yeah. Oh, they're great animals, though. It's the hardest thing to slaughter them. The goats you just get sick of because they like to destroy everything. Pigs, on the other hand,
they're friendly.
Yeah, they're like my dog.
Well,
it's hard.
Before we get into our hot topic today, because today we're going to do something fun. Or at least I think it's fun. I'm going to quiz Brian on Yeah. I mean, kind of live. You're not going to see it live, but Brian does not know the answers to the FINRA's National Investor Knowledge Quiz. FINRA, they, the Financial Regulatory Authority, they come up with ways to figure out how capable are Americans when it comes to financial literacy, when it comes to investment. The last episode was their financial literacy test. Now we're going to actually probably break this down into two, talk about their investor knowledge quiz, because there are a lot of great things that we can talk about and learn. And we're putting Brian to the test.
We are, but there's only two answers. Spend less than you make and have somebody else invest your money for you.
So that's actually neither of the questions are going to work out like that. So, all right. So we're about to get into that. But before we do, we do a lot of reading and research. We come across different news articles and headlines that, catch my eye. So I thought we would take a minute and look at some news. All right, today's headline comes to us from AARP. We've actually never had a story from AARP before, but this is great. Today's article comes from them, and the headline reads, "Backyard chicken ownership booming during pandemic." And I actually like the subtitle even better. "Rental options make it even easier to raise a flock and get fresh eggs."
I don't know about the rental, but I will tell you this. When we ordered our new flock of chicks, we had to go with the breed that we hated the most because they're the only ones available.
Okay. You couldn't find chickens?
No, we could not. They were sold out everywhere.
How many chickens do you have?
18.
And about how many eggs do you get?
Well, none right now because we got on this chicks. But once they're laying, about 18 a day.
About 18 eggs a day, which is excellent because you eat a 9-egg omelet every morning, I heard.
12. No.
Okay, here's what it says. High school teacher Patty McDermott was already an avid gardener and beekeeper when she decided to add chickens to the mix during the coronavirus. It says here McDermott is 55. She lives in Pittsburgh, and she rented 5 juvenile chickens and a coop from a Pennsylvania-based company called Rent the Chicken. What happens if your chick dies? I mean, you got to go from a rental to a purchase, I would imagine.
$10 a bird.
So she named each of the hens, including her Pudgy Buff Orpington. You probably maybe know what that is. I don't know.
A pudgy? I've never heard of a pudgy.
No.
But...
They were describing it as pudgy. But it's actually the type is a Buff Orpington. She named each one after one of her 5 grandchildren, and she sends the kids daily videos of their chicken. Kind of cool. Unexpectedly, the feathered fowl have provided a fun bonding experience. That's great.
And they ate all of her bees.
That could have happened. She refers to them as our COVID entertainment. She says it keeps my grandkids busy. But here's the bottom line. The birds, it says, are also providing companionship. The chickens are intelligent. I don't know. I don't own any chickens. They're sociable creatures. And she's now collecting about 5 free-range eggs a day. Basically, it sounds like a pretty dang good deal to rent chickens and have some in your backyard.
I don't know about renting them, but buying them, I mean, we paid, I think, like 85 cents or $1.85. It was really cheap for the bird. It really is.
I would imagine that in the rental business, you're getting much more for the coop rental.
Probably.
Than the chicken rental.
But it does save on the grocery bill. It does, because we have six people in our family.
Right.
We eat a lot of eggs. Yep. And we use them. I mean, we make our own mayonnaise. I mean, it's super easy stuff to do. So we use everything.
So that's awesome.
And when you're looking at free range eggs at the grocery store, you can't be having them in your backyard.
My wife does, she purchases our eggs, but I think the last time I checked, I mean, like a dozen free range eggs were maybe like $4, $4.
I don't know. Couldn't tell you.
Well, how would you know? Yeah. You walk out back.
I do.
Yeah. They were 85 cents for the next, how long does a chicken last?
Well, depending on the bird, but we usually keep them for 2 years, and then we sell them for the
chicken meat,
the soup pot.
The soup pot.
Yes, because an old bird doesn't
not
chew
quite
very
as
well.
tender. So,
Yes.
okay, got it. Very interesting. Maybe you want to have your own chicken rental business, or you just want to get some chickens in your backyard.
Yeah, you may have already bought them because you can't find them. It's hard.
Yeah, that is crazy.
Yeah.
Crazy. Just like river tubes around here nowadays for going out and down the river. They don't exist in the state of Colorado. Apparently neither do chickens. We're shopping for different things. So, if you'd like to read more of that story, there is a lot more to it. You can get the link in our show notes. But that's it for now. Let's go ahead and get to our hot topic for the day. All right, so last episode, I talked about FINRA's National Financial Literacy Test. There were only 6 questions designed to find out how financially capable Americans are.
He gets 6 questions, I get 15.
You should have been here last time. What can I say? The results of the last test were that only 34% of Americans could pass the financial literacy test. So now I actually had my mom and my stepdad who were in town visiting while I was preparing. So I tested them and I also tested my wife at the same time. And they all said that the test really was difficult. With my wife, I get it. I take care of all of that in our finances. And I help my mom with it as well. So I get it, but it is important to understand those things. Well, if you're going to be an investor, it is even more important to understand how investments work, what you're going to be investing in, what you might expect to happen.
Right.
So FINRA has their other national test. It's called the Investor Knowledge Quiz.
Okay.
And I'm going to give it to Brian. It is, and I'm also going to put the link to the quiz in the show notes. So if you want to go take it yourself, it'll be in there. Go take it.
You can grade me.
Yeah, I'm going to grade you on the spot. So we're actually going to go through this starting with question number 1.
Okay, I have not looked at them.
Yes.
So,
and then we'll talk about each one. Okay. There's 15 questions. I'm guessing we'll get through 6 or 7.
All right,
let's do it. Here we go. Brian, if you buy a company's stock, A, you own a part of the company.
Okay.
B, you have lent money to the company. C, you're liable for the company's debts. D, the company will return your original investment with interest.
A.
If you buy a company's stock, ding, 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 Brian, you are correct. Yeah. You own a small slice of a company. That's actually how stocks work, right?
That's right. And then that's what gives you the right to receive a dividend if the company pays a dividend.
Because a dividend really is just a sharing of the profits.
That's right.
So,
okay, thanks for joining us. That's the end of the quiz.
Well, you got 100%. On to question 2.
All right.
All right. Brian, if you buy a company's bond, A, you own a part of the company.
Okay.
B, you have lent money to the company. C, you are liable for the company's debts. Or D, you can vote on shareholder resolutions.
It is B.
B, you have lent money to the company. That is correct, sir.
All right.
A bond is basically it is a loan to something.
Yes.
Right? You can get a government bond. You can get a municipal bond. You can get a corporate bond, but you are lending them their money. And then what happens? How do you get paid for that?
You can buy a bond from Rob.
I don't have any bonds
that's right.
yet.
He doesn't.
So I'm working on it.
Yeah.
So Brian, why would you buy a bond? What do you get in return?
Well, because the expectation would be this, especially let's just say investment grade, right? Is you're going to get your principal back plus interest for you loaning them money.
So yeah, with the way that a bond works, if you give a company, if you buy $1,000 bond,
Yep.
It typically is for a time frame. So let's just say 10 years. Okay, making it up.
Make it easy.
That means at the end of 10 years, they're going to give you $1,000 back.
Your principal.
But they're going to offer you a coupon rate or a yield, or really it's a payment.
Right.
It's the interest you receive
That's right.
for them borrowing your money.
Yep.
Okay, very cool. All right, Brian, a follow-up question. Question number 3 is, which type of bond is the safest? Is it A, U.S. Treasury bond, B, a municipal bond, C, a corporate bond?
Well, it's U.S. Treasury.
It is a U.S. Treasury bond.
So when you think about that, it's because it's based on the tax collecting ability of the federal government.
That's right.
Is what it's based on. If you look at municipals, we've seen cities around the country have trouble making their payments, especially now because tax receipts because of COVID has really reduced their income. So that could be a risk at some point. And the same thing's true on the corporate side, right?
And of those three, who has the biggest ability to collect taxes? The U.S. Treasury,
that's
right?
right.
Yep.
Or the biggest ability to print money.
Also, the only ability to
the
print
only
money.
one. Yeah, that's right.
Others can print, however, they do get in trouble.
Is that illegal? I think
It's still illegal.
Okay.
Yeah, still illegal. Okay, Brian, question number 4. In general, if interest rates go down, then bond prices, A, go down, B, go up, or C, are not affected. If interest rates go down, bond prices go
upwards.
So the answer is B. And yes, Brian, that is correct.
It works like a teeter-totter.
Yes.
Right? Think of the teeter-totter, right? Let's say 30-year out the end of your fingertip.
30-year bond, long ways out.
30-year, way out. Interest rates go down, what happens? The value of the bond, what you paid for it, goes up. The closer in you go to the axis, the less affected by interest rates happens on those particular bonds.
Bonds and interest rates have what is called an inverse relationship.
That's right.
So interest rates go down, bond prices go up, interest rates go up, bond prices go down.
Yep.
So excellent. Brian, you're 100% so far. You want to answer another one?
I'm sweating.
Great.
I am sweating.
Question number 5. Which of the following is the definition for a junk bond? A bond that is rated as below investment grade by rating agencies. B, a bond that has declined dramatically in value. C, a bond that has defaulted. Or D, a bond that is not regulated. Which is a junk bond? A bond that is rated as below investment grade is indeed a junk bond.
Yes.
So now, does that mean that they are junk?
No.
What does it mean?
It just means there's a higher rate of interest that is paid on that bond because there is risk associated with the issuing agency. We'll just say XYZ company issuing that their debt to income ratio is a little out of whack. So therefore they have to pay a higher interest rate
in order to borrow my money.
Yeah. Just think of it like people with a mortgage. Mm-hmm. So if you have a 500 credit score, you're going to pay a higher interest rate than if you have, 800
credit score.
Right.
So excellent explanation. And you're still batting 1,000. Good job. Okay. Question number 6, Brian. A no load mutual fund is one that A, carries no fees, B, carries no sales charges, C, does not contain high-risk securities, or D, has no limit on the period of time which it can be bought and sold. You want me to read it again?
No, it's the one that has no sales charge, so B.
That is correct. All mutual funds have some kind of fee.
They have to.
Otherwise, how would the company be able to offer them? How would they pay for their staff and the research and the management?
Right.
But not all mutual funds have sales charges, and a sales charge is technically called a load. Mm-hmm. So a load would mean that it does, and no sales charges is a no-load mutual fund.
That's right.
So excellent. Way to go. All right, let's take a quick commercial break. That'll also allow me to get a quick drink real quick. We'll be right back after this. Hey everybody, it's Robert Edgen here, host of Your Money Puzzle podcast. This is a great and safe place to learn about what you need to do to have a great financial future. And it starts with learning because learning makes you wise, but you have to do what you learn if you want to become wealthy. And we want to help you do just that, to do what you learn and to become wealthy. It starts with a quick, no obligation, free to you 15-minute phone conversation to talk about your goals and the strategies to get you there faster and easier. We call it a financial discovery session, and you can schedule yours right now by texting the word discovery to 719-645-4838. We'll text you back a link to schedule your one-on-one conversation with a real financial advisor. Again, that number to text is 719-645-4838, or you can schedule your 15-minute discovery session right on our website, www.edgenjohnsonfinancial.com. All right, let's get back to it with question number 7. Brian, in general, investments that are riskier tend to provide higher returns over time than investments with less risk. Is that true or false?
True.
Riskier investments are typically invested in growth type funds, equities.
So a company that is looking to grow, let's just say biotechnology is one of those sectors that I've always liked for whatever reason. Okay, I've always liked that. So you take that one and you compare it to, say, Procter & Gamble.
Okay.
Procter & Gamble makes something that everybody in this country and most people in the world use.
Yeah.
Toothpaste.
Yeah.
Right? Or your teeth fall out. Biotechnology, they research like crazy to develop a vaccine. What are we in right now? COVID. To develop a vaccine. So there's a lot of money that's put out for a chance of a return. So therefore, as the risk goes up, your return goes up, because when they hit the ball, they don't hit, a single. They hit a home run.
Now, the truth is, yes, in a long-term perspective, riskier investments tend to provide higher returns. In a short-term time frame, it might be the exact opposite.
That's right.
Right? And they might not gain anything.
They might not.
Right? They might not hit the ball at all.
There's lots of pharmaceuticals and biotechnology companies that they come out with an expectation for a product. And if it fails, the company is gone, and all the investment's gone. But if they hit that home run, that grand slam, you can make a ton of money.
All right, so this is not a part of the quiz, but if you get, in general, higher returns from riskier investments, which is the question in general, then should we just all invest in riskier investments?
Only a part.
Yeah. It depends, really, right? What are your goals? What are your time frames, right?
But even still, how much risk do you really want to take? A lot of people look at risk and go, oh, man, I can go all in. I have no problem with that. But if the stock goes down 20%, they're having coronary.
So, yeah.
They don't like it.
That's right. So in general, the answer is yes. Riskier investments tend to produce higher results, higher returns over time is the key word there. Over time. So, okay, here we go. Number 8, which of the following organizations insures you against your losses in the stock market? The FDIC, FINRA, the SEC, the SIPC, or none of the above?
None of the above.
Well, that is correct. None of the above. So, Brian, what organization insures you against losses in the stock market?
No one.
That is correct. Even my trick question, Brian, you answered. You're like the smartest business partner I've ever had. Yes, no organization ever insures you against losses in the stock market. I thought, FINRA threw a trick question in there.
They did.
Yeah.
Well, let's talk about FDIC real quick. That's your savings account.
Yeah.
That's the stuff that you put into the banking system.
It does not prevent from investment risk. It prevents from the bank going out of business and you losing your money.
Yep.
I mean, it doesn't prevent the bank going out of money.
No.
It protects you, or going out of business, it protects you from losing your money.
That's right.
So, question number 9, if a company files for bankruptcy, which of the following securities is most at risk of becoming virtually worthless?
Okay.
The company's preferred stock, the company's common stock, the company's bonds.
Common stock.
Common stock. Common stock is the first to go. It becomes worthless the fastest. And if you own common stock and a company goes bankrupt, what happens to your money?
See ya. You're the last one to be able to collect in the liquidation of the company.
Yeah, because a bond, they had borrowed your money, right? So they need to give it back.
You're number one. Preferred stock works similar to a bond. Similar.
Okay, so common stock. Now, what is the type of stock that, this is not a follow-up question. What's the type of stock that most people buy?
Common
stock. That's right. Yep. Okay. Number 10, which of the following best explains why many municipal bonds pay lower yields than government bonds?
All right.
A, municipal bonds are lower risk. B, there is greater demand for municipal bonds. Or C, municipal bonds can be tax-free.
C,
it is muni bonds, as we call them, but municipal bonds can be tax-free.
They can be, and it depends on the state that you live in, and it depends on the bond that you buy. So if you living in Colorado, if you had a municipal bond from the state of Colorado,
tax-free.
Tax-free.
So that's right.
Federal and state.
So because they are tax-free, they don't have to pay as high of a coupon or a yield. They don't have to pay as much interest because it's not going to be taxed.
That's right.
Number 11, you invest $500 to buy $1,000 worth of stock on margin. The value of the stock drops by 50%, so you sell it. Approximately how much of your original $500 investment are you left with? A, $500, B, $250, or C, $0?
That's a great question because I've never traded on margin ever.
What do you think it is?
$250.
The answer, oh my gosh, you got one wrong. That's actually, I'm a little bit thrilled because I got to buzz you. So, and no, you've never bought on margin.
Never.
And that's not something that's not something.
No, we do not do that.
We also don't recommend it.
No.
So buying on margin means that you are borrowing their money to invest on your behalf.
So if you invested $500 to buy $1,000 worth of stock, it dropped in half, so you lose all of it.
You lose all of it because you still owe them $500.
Yep.
That's the thing with margin. I mean, if you did this and 1,000 went to 2,000, well, then really you would still have to give them $500 back.
If you guys have been listening to me or some of the ones that I've been in, I hate debt.
You do.
I do. I hate it. I'm adverse to it because of the risk of losing what you have by borrowing money that you don't have.
That's right. So this is not a part of the quiz, but I would say, Brian, should you ever invest on margin?
No.
No, I hate it too.
No.
I hate it too. That's
the
right.
risk is way too high.
That's right. Question number 12. Which is the best definition of selling short? Question. Answer A, selling shares of a stock shortly after buying it. Okay, that's got the word short in there.
It does.
B, selling shares of a stock before it has reached its peak or high. C, selling shares of a stock at a loss. Or D, selling borrowed shares of a stock. Which is the definition of selling short?
D,
selling borrowed shares of stock. This is actually a good follow-up to, the last question about margin. But you can borrow shares. Yep. But then if you sell them, then yes, that is called selling short. Yep. There's only 3 left. I'd say we just go for it.
Let's do it.
All right. Question number 13. Hedge funds are always subject to the same rules and regulations as mutual funds. Is that true or false? False. Hedge funds have much different rules than mutual funds. So why don't I just go invest in a hedge fund, Brian?
How much money do you have, Robert?
So, I don't really want to answer that.
That's why, because it takes a lot of money to buy into a hedge fund.
So, correct. So, typically folks who are investing into hedge funds are not, the mom and pops.
Right.
It's, it's the universities, it's billionaires. It's a lot of money. It's millionaires.
Yes.
Lots of millions. So, okay.
Lots of millions.
And they do have different rules. Question number 14. The principal difference between mutual fund share classes, Class A, Class B, and Class C is A, the different investments each class makes, B, the different fees and expenses each class charges, or C, the different investment professionals in charge of managing each class.
B
is correct, Brian. Ding, ding, ding. The different classes are referring to different fees and expenses of each type. One question left.
One more. Oh, but
You're so
I got
close.
one wrong.
Well, you might get 2. We're about to find
I'm
out.
not in the Hall of Fame.
Question number 15. A Section 529 plan is a tax-advantaged way to save for A, college, B, retirement, C, meat goat purchases at the 4-H, or D, long-term health care.
College, A.
College. A 529 plan is a college investment.
Yep.
Why is it called a 529 plan?
Section 529 of the IRS Code.
That's correct. So, you know what? That little bonus question there, that makes up for the one you missed.
Oh, I did. I mean, I missed it, but I came up with the answer.
I personally just gave you a 100% anyways.
But if I was a baseball player, if I hit
oh my gosh,
300, I'd be in the Hall of Fame. That's losing 70% of the time.
You just hit 950. So yeah, you're an amazing batter. There you go. Okay. Thank you for participating, for letting me quiz you. If you have a question about any of the things that we talked about or questions about your own money puzzle or retirement, don't keep it to yourself. Send it to us. Let us get it answered. You can send those to questions@yourmoneypuzzle.com or just pick up the phone and call. I'm in the Springs at 719-685-8585. Brian's up in Denver at
303-996-7778.
So got it. All right, Brian, thanks for being in the studio. Looking forward to doing the next one. That's it for this week. Until next week, go out there and have some fun. Be safe, but make sure you do something to improve your future money puzzle. Your future self will thank you for it. See you next time.
Registered representative of and securities offered through Securities Management and Research, Inc., SM&R. Member FINRA SIPC. Investment advisory services offered through BFC Planning, Inc. Edgen Insurance and Financial Services, Johnson Financial Services, SM&R, American National Family of Companies, and BFC Planning are independent entities. There are risks involved with investing which may include market fluctuation and possible loss of principal value. Particular investments may not be suitable for certain situations. Carefully consider the risks and possible consequences involved prior to making an investment decision. Our firm does not provide legal or tax advice. Be sure to consult with your own legal and tax advisors before taking any action that may have tax implications.